The market closed with gains, small gains off the day's high. Nifty ends near 24,140 levels. Sensex holds on to 79,500. Real estate FMC stocks were the top gainers, while IT stocks slid in today's session.
A big boost to banks after RBI issues amendments to the liquidity coverage norms. While RBI eases conditions for wholesale deposits, the central bank tightens conditions for internet and mobile linked deposits and GSEC valuation.
Steel companies buzz in trade after the government imposes 12% safeguard duty on import of some steel products. Brokerages see this as a positive for the sector. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as you gear up for the next trading session. Today was a slower day after really go-go markets we've had over the last 2 weeks or so. I'm Prashant. With me, my colleague Sudip. Sudip, hi.
Hi, Prashant. Slow day, but not bad because digesting the recent rocket gains that we've made.
Yeah.
And pretty decent for the mid-caps. Mid-caps were outperforming. The breadth of the market was good. And there were several pockets of action today.
Lots of pockets of action, and mid-cap and small-cap indices 1% plus in gains. And can't complain. So it's been I think today was the 8th day. Nifty Bank is up 13%. And the Nifty is still up 10 because today, by the time we closed, it was gains fizzled out. We ended with about a 15-odd point gain. So not very much to show for it. Market breadth was positive. I think almost 2:1 in favor of advances. And a lot of action there in terms of single stocks really coming through. Let's actually take it across straight to Vivek to quickly wrap up the day's action in terms of what moved up and down. Vivek, over to you.
Thank you so much for that. Like you mentioned, another session with the advanced decline ratio, market breadth, very strong, very positive. Well, first on the list has to be banks as well as NBFCs. These are the set of stocks that did quite well. Remember, RBI's final LCR norms quite less restrictive against what the initial draft norms were. Names like SBI, Kotak Mahindra, HDFC Bank, all of them gained quite significantly in the session today. The other set of stocks that rebounded quite smartly were the FMCG and especially the consumer discretionary names, especially towards the later part of the trading session. So names like Colgate also seeing a double upgrade by UBS, almost 4.5% higher, ITC, Imami, and even some of the other names like United Spirits as well as Radico Khaitan doing very well in the session. Both of them seeing quite a bit of buying activity emerge in the later half of the session. The other stocks that did quite well were the solar EPC players or players present in the solar value chain. Waaree Energies, this particular company seen as a beneficiary as the US overnight imposed very restrictive tariffs on certain Southeast Asian countries as far as solar cells and ingots were concerned. Dixon Technologies, another sharp mover in the session. Amongst the top F&O gainers today, along with that, the Street sees the company as a beneficiary of shifting of certain supply chains to India. Now, also keep an eye out on Voltas, this particular stock. Post the CNBC Awaaz news break, saw quite a bit of a surge. Awaaz sources tell that there could be a likely relaxation of BIS norms for AC and AC components, especially compressors, Voltas being amongst the key beneficiary if that does come into fruition. On the other hand, quite a few negatives as well. IndusInd Bank Street was worried on the back of the fact that the bank has gone ahead and appointed EY to conduct a forensic audit into a 600 crore discrepancy as far as the MFI book is concerned. Stock ended low by almost 5%. And two-wheeler stocks, especially Hero Motor amongst the top laggards today. Jefferies downgraded select two-wheeler stocks. They've gone ahead and cut volume estimates for the entire space. And Cholafin, one of the few stocks as far as the broad end of the markets are concerned, a CLSA downgrade coming in, and that stock too ended significantly lower. Chola Investment and Finance is the stock we're talking about.
Okay, indeed, there was some pressure over there. Thank you very much for that, Vivek. Well, let's now get to our guest before we talk about the next sector in focus, which is banking. We have Bala of Cash the Chaos joining in, also Sudip Bandyopadhyay of Inditrade Capital. Gentlemen, good afternoon. Good to have you on. Jay, first, let me come to you on the market's technical construct and makeup right now. We've had a couple of very, very strong days, backed by liquidity, backed by FPI flows. What do you make of the market, and what is the trading advice that you'd have at this point in time?
Yeah, for the first time in several months, the markets are starting to look bullish, and it's probably completed a correction from September to April. But this is just a slight edge over the bearish case, so it's not that decks are not completely clear. Reliance Industries and Nifty IT Index strongly disagrees with this view. So I would consider Reliance as a complete sector. And so because of that, two sectors are strongly disjointed and they have heavy weight within the index. And banking index, which is lifting the markets, that's within that, the HDFC Bank, the top name within it, it's probably completing a important top. If it were to drop into 1880, it'll mean an important reversal. As far as trading advice goes, whether you're bullish or bearish, definitely hedges are a must because the markets can go either way. And in the bullish case, you have to wait for a pullback to come through. If the markets were to pull back somewhere close to 23,270 to 22,970 and holds that, that will be a bullish addendum to the market.
Got that, Jay. Stay with us. I'm going to come back to you. IndusInd Bank, and we were talking about banks and financial stocks, of course, quite a bit lately. But the stock was down 5 after rallying about 15-20% over the last 4-5 days. The lender has appointed EY to conduct a second forensic audit to probe a 600 crore rupee discrepancy in its MFI portfolio. Ritu is here with latest. Ritu.
Well, Prashant, it keeps getting worse for IndusInd Bank, even as that derivative portfolio forensic audit is still on from Grant Thornton. The initial hit has been estimated. Now our sources are confirming the reports that had surfaced that IndusInd Bank has indeed now appointed Ernst & Young to carry out a forensic audit, this time of its microfinance portfolio, following the discovery of a near 600 crore discrepancy in this book. Now, the issue we understand is related to the accrual of interest income in this microfinance book and is believed to have emerged between the second and third quarter of the last financial year. Now, while the bank has not made any public disclosures about these discrepancies amid the ongoing forensic audit, the bank has been drawing from its contingent provisions to account for some of these lapses and make these kind of provisions, even though it has not spelt them out in public, as we understand. For context, the contingent provisions of the bank stood at about 1325 crores as of the third quarter, down from about 1525 crores in the previous quarter. Their micro loan book is about 32,500 odd crores, and they had reported about 305 crores in new stress and 344 crores in write-offs in the microfinance segment alone in the third quarter. So more trouble brewing. The audit's going to reveal the extent of the trouble. We've reached out to the bank for a comment, which is still awaited.
Okay, fair enough. Ritu, thanks very much for the latest update. And that's the reason why this stock was under pressure throughout the session today. We also have Sudip Bandyopadhyay with us. Let's get in a quick view. Sudip, IndusInd Bank, just when you think the worst of the troubles are over, all the issues are out, this is something absolutely new. Your advice?
Microfinance book issue is across the industry. I mean, I'm not sure exactly, what happened here, but that the microfinance book for all the lenders is under pressure is very well known, and I suspect that part of it is already provided for or lying in some form or shape in their contingency provisions. So I won't worry too much. Of course, this kind of revelation, unnerves the market, and the share price got depressed today. But I won't read too much into it. I suspect that by and large, the entire microfinance issue is well known to the market and pretty well factored in their books as well, because auditors would not, have kind of rested without that being thoroughly examined. So I won't attach too much of weightage to this particular issue, and probably this dip is a buying opportunity for IndusInd Bank, because valuation-wise, we all know it's absolutely very, very attractive.
Sure. Okay. So you're saying perhaps this could be a good entry point for IndusInd. Got it. Just we want to take slightly broader questions in the rest of the banking space as well. It's the hottest part of the market right now. Before that, let's address this issue of new regulations from the RBI. The Reserve Bank of India has issued amendments to its liquidity coverage norms. RBI has eased conditions for wholesale deposits. It has, however, tightened conditions for internet and mobile link deposits, as well as GSEC valuation. Abhishek is here with the details.
Well, RBI has announced, a revised liquidity coverage ratio in favor of the banks. And if you take a look, additional runoff rate is at 2.5% to internet and mobile banking enabled retail and small business deposits, which was earlier envisaged at 5% in the draft norms. So funding from non-financial entities such as trust like educational trust, charitable trust and religious trust, partnerships and LLLPs shall attract a lower run rate of, 40% runoff versus 100% envisaged earlier. So the biggest change is the sharp reduction that you are seeing in runoff factors for the wholesale deposits, and that's a bonanza for entities like HDFC Bank and Axis Bank is what analysts have mentioned. So Macquarie has written a note. They say that the impact from RBI relaxation, the RBI expects a 600 basis point improvement in LCR ratios for the banking system from Q3 FY25 LCR levels. So they believe that this is encouraging and will provide strong support in the credit cycle. Back to envelope calculation for them shows that there will be a release of 2.5 to 3 lakh crore worth of liquidity which may get deployed in this system. So hence, this would imply 140 to 160 basis point potential increase in credit growth for the banking sector in FY27, because these rules are applicable from 1st of April 2026. So on your screen for reference are the various LCR of various banks as of Q4 and Q3 FY25. Back to you.
Okay. All right, Abhishek. Got it. Thank you very much for that. Jay, just quickly back to you. Since you're saying overall the market setup is looking positive after a long time, what about banks? They're in leadership position. Any trades here?
Yeah, see, IndusInd Bank, you discussed, I don't think the high of 2024 and the all-time high is going to get taken out before 2026. It's going to consolidate in a sideways range for several months. When it comes to HDFC Bank, that's the leader here. And HDFC Bank, if for the bull case, if it were to drop under 1900, it's a little, not a perfect number. It's a rough number. More importantly, it's a structure that matters. So take it as a rough number. It can be 1900. If the HDFC Bank were to give up all these gains and drop into that zone, that will be very impactful for the overall market and the bull case and for the banking sector. So watch IndusInd Bank like a hawk in the next couple of sessions or by the end of the week. If it were to give up all the gains or some of the gains or major portion of the gains that it gives that made it this week, then that will be quite negative and damage the bullish case.
Okay, so watch IndusInd Bank like a hawk, says Jay. We will definitely do that. But I think with that, we're completely out of time. Apologies for that, gentlemen. Shorter chat today, but thank you for joining in. Okay, well, with that, I suppose it's a wrap. Day 2, Tuesday done.
And I think that JD Vance's speech is going to be the highlight, which is going to be analyzed threadbare for the rest of the evening. Absolutely. Well, we'll take your leave. Thank you very much for staying with us. But news and updates continue. We'll take a quick commercial break. Be right back.